Hi, this is Chuck, Better Loans Low Trade. I'm going to try and do a chart today, or a video today, on a chart type that you see fairly often. Normally you'll see a chart that looks like this in foreign stocks. Okay, these are tradable but not investable. Now, what you're looking at is highly emotional stocks that have large troughs and trenches and many gaps involved. Okay? Normally what will happen is when you find these foreign stocks, there'll be very little institutional investors involved in the things, and normally you don't see very many, if at all, any coverage by analysts. And I can't pin down why this is, or why they trade like they do, or what the heck is happening with these things, but it's just the norm. Now, the one stock that we were talking about, TF, which is down here, if you see, it's from Spain. It's a foreign stock, okay? You can see the large troughs and the large trenches. You can see all the gaps that are involved constantly all over the place. This is a fairly common looking stock. Now, if you come down, look at your institutional, 1.8% institutional. Normally, my rule of thumb is I would invest long term, okay, that's 6 months or more, in a stock, unless it has at least 30% institutional investment. That's my cutoff. Anything less than that, normally, if the big guys aren't interested in investing in these things, why should I invest in them? That's the theory. Okay, we come down a little bit further. You can't see it right here. Right here, the last time this thing was had any institutional saying anything about it was back in December of 2011. So this stock has had no analysts involved with it, and very little institutional people involved with it, and that's telling me, and should be telling you, that this is not an investment stock. Okay? So the next step down is it a position trade stock? Well, it could be a position trade stock because the trenches and the troughs are 3 months, less than 6 months long. I mean, a position stock is 3-month holds. You usually trade them quarterly. So you could get involved with these foreign stocks that have these emotional things as a position trade, but I would not recommend thinking of them as long-term trades. Now, to reinforce that again, here's another thing you'll see in these types of foreign stocks all the time, is they don't go anywhere. Okay, all they do is flux. Now, here's what is this, 6-month or a 9-month chart? Here's a weekly chart. It's going nowhere. Okay, $14, $15 is about, it's right here in the weekly chart, which is 1-2 years, it's fluxing around 14 bucks. You go to a monthly chart, it's fluxing around 14 bucks. It's going up and coming down, and going up and coming down, and going up and coming down, and going, but it's not going anywhere. All it's doing is giving you gains and losses and gains and losses. Highly emotional, and that's the reason that, in my opinion, no institutional people are involved in the thing, and no analysts are even bothering covering it, because of some freaky unknown reason these things trade like this. So we're going to go back into our daily. Let me show you another example. Just to show you what I meant, I did a little bit of research, and I found that Honda, which is, wait a second, where did I put it? Okay. HMC, is it? Honda. Whoops. Sorry. I will get there. HMC. Bingo. Look at Honda. Same thing. Gaps all over the place. It's going down, going down. Now look at this. just completely emotional. No information. I mean, no consistency, no stability at all with the stock price. And you go down further, what do you see? 2% institutional. No institutional people want to get involved in this thing. Honda's a big name stock, just like TEF is a big name telco in a foreign country. We go down to the analysts, and once again, you can't see it, but the last time any analyst reported on this thing was 2009. Okay? So you're going to see these types of charts. There's your weekly. Here's your hover point, 36 bucks. Up and down, up and down. Here's your monthly. Several years, 2007 all the way up, 31 bucks. Fluctuating, up and down, up and down. Sorry, excuse me. I'm still trying to get over this darn cold. So, let's go back. Let's go all the way back to the original stock that we were talking about. Okay, what I want to do is show you how back in the day when I used to get involved with these things, when I was trying to learn all different techniques and all different styles and develop a business plan and all that stuff back in the early 2000s, I tried these for a while. Excuse me again. Damn, this is going to be a bad video. But what I found was you have to consider these things as swing trade stocks, okay? But you can't trade them like a swing trade stock. You don't use the same TA indicators for your entry and exit points on these things, and you don't use your support indicators at all. On these things, you have to think swing trade, but day trade, okay? Now, let me go back up to here and see if I can give you an idea what this is all about. Okay, we're going to come back into a trading chart. And if you remember, most of the time when I post charts, I have the DMI as the entry exit signal, and I have the 5, 10, and 20 as the secondary overlay for entry and exit. Well, I'm going to keep the DMI as a swing trade indicator, but I'm going to change to a day trader's overlay, which is, if you look right here, is the 2-day, 4-day, and 8-day, which means we're going to be jumping in and out of this stock quickly with a swing trade mentality. Okay? Now, with the 5, 10, and 20, or 2, 4, and 8, anytime that they're lined up in order, which means the lower number, the 5 is on top, the 10 is in the middle, and the 20 is in the bottom, or the 2, 4, and 8, or that means they're lined up in order. That's telling you to be in the stock, okay? When they're lined up in reverse with the higher number on top, middle number in the middle, and the lower number on the bottom, that's telling you to be out of stock. So your entry and exit signals are when the 2 crosses the 4, enter the stock, okay? When the 2, here we go. When the 2 crosses the 4, enter the stock. And when the 2 crosses down, exit the stock. Okay? Because we're not looking for confirmation on these things, because we're not swing trading them. We're day trading them. The confirmation in this kind of thing is using the weekly DMI to confirm pivot points. So with the DMI, what happens is when the DI crosses above, one DI crosses above the other DI, that's an early entry signal. And when the ADX, which is the black line, turns up in the same direction as the top, that's the confirmation. So right back here, we had a weekly swing trade technical indicator of an early exit in this stock, okay? But it never confirmed, okay, until it started turning up right here, Okay, so right at this point, this is the confirmation on a swing trade that you should be out of this stock. And if you come down here, you're going to see, guess what? The 2 crossed here, early exit. So trading, this is what you're trading. This is what's confirming the trade. Trading here, as soon as that 2-day blue crossed below the red, it told you to get out. So you sell, okay? Now here we go again with all our big gaps and our gaps and our gaps. Now when the blue 2 line crossed above the 4 line, that's giving you early entry, okay? So it's telling you here, sell here, buy here. So here's your first buy on this stock. And you're going to hold this thing. You're not going to care that the 4-day confirmed that you're here, because again, we're swing trading this thing with a day trader's mind. Okay, so we're going to be early entry, early exit, early entry, early exit. We're not waiting for confirmations. We're not waiting for support. We're not waiting for anything, because there's so much emotion involved in these things. All these damn gaps, you never can tell when emotion's going to swing one way or the other, so you want to be quick with these. Right here, okay, let's see why I put this. Right here is when it started to confirm, or should I say, it started to look like it was going to turn positive, but it didn't, okay? So there was no confirmation on the weekly swing trade type chart that you should exit this thing right here, but your early day traders indicators told you to get out. Okay, so we got out here. We got in here, we got out here, we got our gain. If you happen to look at it, you're looking at gaps, a gap, a gap. Okay, the gap target for this thing would have been, it goes all the way up to here, and it just so happened to make it. Just barely. Okay, so we're gonna continue this on, and we're watching our daily overlay, the 2, 4, and 8. We're seeing that we should be out of this stock. We should be out of this stock. Right here it hiccups a little bit, but it never really crosses the red. Okay, so you still don't enter it. And we keep coming down, we keep coming down. Finally, we're actually getting a clean 2-day crossing the 4-day, our re-entry signal. Okay, so here's where we buy again. Again, we're gapping up, we're gapping up, we're gapping down, we're gapping up, we're gapping down. Here's a touch, but not a real cross. Here's a breakout, but never really crossed out. So these are sort of fake type things. You don't get your exit signal, the actual exit signal, until this blue line right here crosses the red line cleanly, which is right there. So we got our buy signal, we got our sell signal. Early signals, early entry, early exit. Early entry, not really, not really, early exit. So we got 2 trades out of this from September, one in September and one in October. And we come down here, no sooner did we get out of this thing, and it turned around and it crossed again. The 2-day crossed the 4-day again, telling you to get back in, and that's where you're at right now. Now, it's come back down just recently and touched, but it didn't cross. So you're at a decision point right now. Right back here is an early entry in your weekly swing trading chart, okay? But there's no confirmation in the ADX turning up with it until right here. So if you were swing trading this, right here you would think, okay, maybe I could take a small position. And right here, when the ADX confirms, that's where you could take a larger position. You come right down. So the weekly swing trading chart is telling you to get into this thing right here. Okay? The early one is telling you to get into it right here. We're saying, because of using a day trader's mentality on a swing trader's chart, that we should also get in right here. So this is this is confirmed. I think I'm getting a little confused. What was I going to talk about? Okay, overall, basically, you're going to. Just want to recap everything. You're going to find these things in foreign charts. You're going to find them in foreign charts. You're going to find that a foreign chart with a bunch of gaps and a bunch of tranches and a bunch of trenches with no institutional and no analyst involved. You're going to find these things all over. And you can make money trading these things, but what you have to do is you have to trade early entry and trade early exit. You have to reduce your 3-month swing trading chart, okay, to 2, 4, and 8-day entry and exit signals and use them for entry and exit while confirming up here that a major reversal is going to take place. Right here is where we had the confirmation ADX starts going up when we had a down trace signal above telling you that a reversal is occurring. Right here, where are we at? Right here is where we had our early entry, okay? And our confirmation was right here to get in, be in the stock. So you can use these in the back of your mind, but basically what you have to do when you see these highly emotional ones, you have to figure, no matter what gap happens here and what gap happens down here, eventually these gaps are going to try to fill. But the problem is there's so much emotion involved in all these things. You never know if they're going to gap up, which means you can't day trade. You can't really day trade them, okay? And you're not sure that they're ever going to go all the way up and completely fill all the gaps that came on the way down. Now there's a gap. Okay, so let's draw a line here. Here's the start of your major trough, okay? And she's coming down, and we're having a whole bunch of gaps and a whole bunch of gaps and a whole bunch of gaps. Here's the end of it. On the way up, you're getting the same damn thing. Now, your problem is you can't actually day trade these gaps because there's so much emotion. You know, here's a day where it gapped up, and it gapped up again, and the next day it came back down and filled this gap. And then it turned right around and gapped up the hell again, and this one turned around and tried to fill this gap again. If you tried to actual day trade this thing, you would be in and out and in, and you'd be losing your butt all the time, okay? But on a 2, 4, and 8-day moving average overlay, if you took an early entry when the 2 crossed the 4 and an early exit when the 2 crossed the 4 on the way down, you could actually swing trade this thing on a day trader's indicator. I guess that's about it.